Stop loss hit. Oh no. I know the feeling. I think you know the feeling too. But there's something that you're missing, and in this video, I'm going to tell you what that is so that you can avoid losing trades and stack more winners under your belt. Welcome back to Mark for Success, where I help beginners become profitable day traders. In my last video, I talked about how I would go over how to spot a danger zone, so I just want to go over that with you guys. Because the thing is, there is a lot that you have to pay attention to when you want to trade supply and demand profitably. And I'm going to go over these things one topic at a time. I feel like one thing that's not talked about enough is the 5 minutes opposing supply when you're looking for buys in an uptrend. As you can see, I've marked out the 5 minute supply at the top towards the left, and I've written it up as the danger zone. But it will not always be so much towards the left. It can literally be within current price action, like on the right. And just to give you some context, the previous 1 hour candle closed green, and so our bias is bullish. Right here, we have a 5 minute demand zone, and price is making its way back to the demand zone as we would like. But there is something that you must pay attention to right here. The red candle that closed created a break of structure, and though it's not a huge bearish break, it is still indeed very valid. So I want you to pay attention to that. And if it's one thing I want you to remember is that a demand zone is no longer valid once there is an opposing break of structure as price makes its way back to the zone. The bearish break literally cancels out the validity of the demand zone. And what I mean is that it's not a good zone to take a trade from. It's a void zone, aka a losing zone. I promise you that if you try to trade this zone, your trade will hit stop loss. So let's take a look at what's going to happen when price gets there. As we're waiting for price to close in the zone, I'm just checking the 50 minutes chart so that you can have a deeper understanding of what I'm actually trying to tell you. All right, so on the 50 minutes chart, there is a support level. And what I mean is a red candle followed by a green candle. Without any doubt, you can see that the 50-minute support is breached in a bearish fashion. So this is another factor that invalidates the 5 minute demand zone. Now back on the 5 minutes chart, price is inside the 5 minute demand zone, and we're just kind of waiting on the candle to close to move forward. Now once the price closed red, the red candle will become our candle of interest for a break of candle entry. Now remember, this is a void zone, so you're technically not looking to enter. I'm literally just using this trade for the purpose of an example only. Okay, so we have a break of the candle, and that means that would have been your entry right there. And if you simply don't know that this is a void zone, then you're going to look to take that trade, which will eventually result in a loss. I promise you. Now, look, the price is deceiving someone that it wants to go up, and I hope it's not you. But remember the bearish break I talked about earlier? Well, that break left behind a very active supply, which is going to challenge price. My rule of thumb is to be careful of 5 minute supplies that are up to 30 days old. If it's older than 30 days, I may not worry about it so much, but if it's not, I'm going to pay attention to it. Especially if the 5 minute demand zone is standing on its own. And when I say that, I mean when it's not backed by the 15-minute zone. So if it's inside a 50 minutes demand zone, I won't worry about the 5 minute supply when I'm taking my trade. But outside of that, you must show caution to these areas if you're literally just using a standalone zone. Anyway, that little supply that looked weak and fragile stopped price from going up, and price is now coming for your stop loss. So never underestimate these little danger zones, as I like to call them. So your buy trade turned into a sell trade just like that. Personally, I would not look to sell at that area. I would just use it as a factor to not buy. So essentially, I would sit this trade out. I would not buy nor sell. So if you entered and was holding at current candle stop, you'd lose. And if you held the zone, you'd still lose. So there you have it. Pay attention to those 5 minute supply zones and never underestimate them. I hope this gave you a little bit more understanding of how to approach your trades, and I look forward to seeing you on the next video. Don't forget to like, comment, share, subscribe, and I'll see you in the next video.